Want to know how to use AI tools to build a diversified portfolio from scratch? By the end of this video, you'll understand how to do just that, and I promise you, this will be way more actionable than anything you've seen elsewhere. No affiliate links, no gimmicks, just pure value. Building a diversified portfolio from scratch used to be something reserved for those with insider knowledge or high capital. But now, with AI tools, that's changing. Today, I'm going to show you how to leverage these tools in ways you probably haven't thought of yet. Whether you're just starting out, or you're looking for ways to automate your investing strategy. You might think AI is just for data analysis or trading bots, but it's so much more than that. One key aspect AI helps with is simplifying the research process. Imagine you're sifting through endless amounts of financial news, market reports, or stock data. Normally, this could take hours or even days. But with tools like ChatGPT or even specialized financial platforms, you can automate this research in minutes, pulling insights from multiple sources and summarizing them into actionable steps. You save time and get a clearer view of the market faster. Now, don't tune out just yet. I know you're probably thinking, I've heard about AI trading bots. And sure, those can help. But AI isn't just about automated trades. It's about building a smarter, more informed portfolio. AI can analyze your personal risk tolerance, then suggest a diversified mix of assets. Stocks, bonds, real estate, even cryptocurrency. AI can sift through data to tell you what will balance risk and reward in your portfolio based on your unique goals. For example, take a look at tools like Wealthfront or Betterment, which use AI to optimize investment portfolios. These tools analyze market trends, economic shifts, and risk factors to create portfolios that aren't just based on yesterday's performance but on forward-thinking predictions. That's the power of AI in portfolio construction. It's not limited to reacting to the market, but also anticipating its movements. And this is where it gets interesting. AI can even take emotion out of investing. One of the biggest mistakes investors make is acting on impulse during market volatility. But with AI, you can set your portfolio to automatically adjust based on certain parameters, like market drops or new trends, without worrying about making decisions under pressure. It takes the emotional element out of investing and helps you stick to your long-term goals. I'll give you a quick tip. If you're just getting started, don't try to rush things. It's tempting to throw everything you've got into a high-return, high-risk investment. But AI tools can help you manage this risk by showing you what percentages of your portfolio should be in high-risk versus low-risk investments, based on real-time data and predictive models. Here's a little-known feature that a lot of people don't consider: using AI to track and rebalance your portfolio. Over time, your portfolio's risk profile will change due to market fluctuations. AI tools can help by constantly monitoring and readjusting the allocations to keep things balanced. Without AI, this would be a full-time job. But with the right software, it's all automated. Now, before I wrap this up, I want to leave you with something critical. Diversification isn't just about mixing up asset classes. It's about mixing strategies too. While AI can help you with asset allocation, it can also help you with alternative investment strategies like peer-to-peer lending or crowdfunding. Platforms like Fundrise or CrowdStreet allow you to diversify into real estate projects with just a small investment. And guess what? AI can suggest the most promising ones based on market and location data. So here's the deal. If you're serious about using AI to build your portfolio, start small but smart. Use AI for research, automate as much as possible, and let it help you balance risk while keeping emotions out of the picture. But most importantly, always be strategic in diversifying, not just with stocks and bonds, but across different strategies and assets. If this video gave you some serious insight, make sure to subscribe. I don't have affiliate links or hidden incentives behind my content. I'm just sharing what works. If you want more content like this, hit that subscribe button to keep up with more no-strings-attached advice to help you take your investing to the next level.